we have some things we want to say first before the actual workshop begins. First and foremost, thank you for spending your time with us tonight. I know you have other things you could possibly be doing, and I also recognize that it's been an extremely challenging week and past few months for everyone, especially in our African American community, and want to acknowledge that and let you know that we work for you, we're here for you, first and foremost. But I hope that tonight is a night that we can focus on you, and your dreams and your goals for homeownership. And you can call this self-care if you want, but we want to make sure that you are focused on you tonight. You get your questions answered from the absolutely wonderful experts that we have lined up for you tonight, and be able to learn and share this information with others who you think may need it. If you, again, for those of you who are just now joining us, you're welcome. If you're just listening in on the phone, you can go to our website, which is okc.gov/SNI, and you can view the slides that will be here tonight. You can also print them off, and you can also email them and share them with others. You are all on mute right now, and I appreciate that. There will be a Q&A session, be 5 minutes long, about midway through, then we'll have another one at the end. You're also welcome to put your questions in the chat box, and we are watching that, and we will try to answer them as we go along too. And I think we'll get started. Jennifer, we'll go next slide, please. So this is I'm Shannon Ince. Jennifer Sylvester's in here too, and we are city planners with the City of Oklahoma City. And we have a program with the City of Oklahoma City called the Strong Neighborhoods Initiative. And we manage that for the planning department. It is federally funded. It's a neighborhood revitalization program. And we have 3 neighborhoods we work in right now, which are Culberson's East Highland, Capitol View, and Capitol Hill. And starting July 1, we'll have Metro Park as a new SNI neighborhood, so we're very excited about that. There's some links there to our website and all of our social media. And at the end of this presentation, you are going to have just an absolute wonderful list of resources. You're going to have phone numbers and emails for all the people that you're going to hear from tonight. So be looking forward to that. One thing you'll see this slide again later, but I want to make sure this is super important because this just became available this week. And for those of you who have aspirations to be homeowners, you definitely don't want to see get behind on utilities and mortgages or rents or anything that can impact your credit. So if you do need assistance with your rent, mortgages, electric, gas, and water, be sure and call Community Action first thing tomorrow. There's also a website there, a web link. You can go to that and you can apply online. So that's probably even faster than calling them. They may have, their phones may be jammed for all we know. We know that a lot of people need this. Please set your pride aside, please, and call this number if you absolutely need it. There's absolutely no shame in asking for assistance. So we have, again, a fantastic group of people who are going to share some wonderful information with you. This is not intended to be a full-blown homebuyer education class. This is kind of an overview of the process, and but you will get to see and hear from these experts the same things that you might hear at the workshop, but the workshops are a lot longer, or the education classes are a lot longer. And so we're so pleased that all these fantastic individuals agreed to assist us tonight and share their information with you. So first off, we have a fantastic message from our Councilwoman from Ward 7, Nikki. Then we'll talk with our HUD Field Office Director, Sharon Gordon-Ribeiro. We'll talk about the home buying process with Torri Rodgers. We'll talk about homeowners insurance. After that, we'll have a Q&A. We'll go into predatory lending with attorney Alejandra Johnson and Mary Dulan from Metro Fair Housing. And we'll have a good presentation from Alejandra Martinez about down payment assistance opportunities. We'll have a few slides of some fantastic photos of homes that are available right now in Northeast Oklahoma City. And we'll also talk about local housing resources and answer any questions you have. So this is going to be a very agenda-filled quick workshop. Hopefully we'll be finished by 7:30. But again, you'll have all the resources you need in terms of emails and phone numbers should you have more questions that we don't have time for tonight. So first off, we have Councilwoman Nikki, and she has just been a wonderful leader in Oklahoma City. She has spent her entire day today in the City Council. So we are absolutely thrilled that she is able to set aside some time for us. Ms. Nice, are you on the line? Where is she at? See, Jennifer, you may have to unmute her. Okay. Ms. Nice, can you hear us? She is on the call. Okay, looks like she's hung up. Maybe she'll have to call back in. We'll come back to her. Sharon Gordon-Ribeiro, are you available?
Yes, I am.
Wonderful. Well,
I will be happy to go ahead and good evening, everyone, and greetings from the U.S. Department of Housing and Urban Development. As Shannon said, I'm Sharon Gordon-Ribeiro. I'm the Field Office Director in the Oklahoma City Field Office. Also joining me is Bill Tolbert. And happy Home Ownership Month. And we are very excited to be joining you this evening for the Home Ownership Workshop. And this evening, what we're going to do is just sort of acknowledge some of the uncertainties and then give you information and resources on how we can get through some of these uncertainties. One, we all know that as far as homeowners, in the month of April, paying mortgages hit an all-time record high of not making mortgage payment in the month of April, according to the Washington Post. And then also we're dealing with issues with record unemployment that's caused by this coronavirus and the pandemic, which also led to one of the largest 1-month increase in mortgage delinquency. And that is the largest amount that was ever recorded, and that was even considering the Great Recession. Delinquency rate actually doubled between March and April. April is recorded at a 6.45, which normally it's at like a 0.06. But even with all of these things being said, and then HUD even offered forbearance agreement to allow people to focus on their emergency needs rather than the mortgage payment. But even with all these uncertainty, there's one thing I think most of the panel can agree to is that it still is a great opportunity for a home buyer. And some reasons why this is still a great opportunity is that the home purchase demand is still higher now than it was prior to going into the pandemic. And then also the low mortgage interest rate. And I'm sure some of our lenders and some of our speakers will talk more on that. I think with last week rates, we were anywhere between 3.15 and a 3.27 on a 30-year mortgage, and 15-year were registered in like 2.62, between 2.62 and 2.7. So with that alone, it's a great opportunity to start thinking about being a home owner, because now at this time you can buy more house for your money. Also dealing with increased remote working and social distancing, that's also a time to reconsider and revalue your ideals with putting your family first and your priorities first. So this workshop tonight is just going to be an opportunity to revisit resources that are available within the community. And we're going to deal with information such as dealing with the contracts. And then the main thing is to let you become aware of monies or funds that may be available to help with down assistance. So again, thanks to Oklahoma City for having the vision to sort of put this together. And again, welcome to everyone who's joined us today with our Strong Neighborhood Initiative and other people who may have gotten the word. So again, thank you for inviting us to be a part of this. And I'm looking forward to some of the information. Thank you, Oklahoma City.
Yep. Thank you, Sharon. You know, HUD is such a fantastic partner of ours. Just to explain just for just a minute. So, you know, most of us are familiar with HUD through maybe Section 8 programs, or we hear about public housing, those types of things. They do so much more than that. And one of the things that we utilize in Oklahoma City is called community development block grant funds and home funds. And both of those are geared towards home ownership, housing, community development. You know, absolutely essential programs for Oklahoma City and all of our cities in the U.S. So, Sharon, thank you for taking time out of your busy schedule. Bill, who's also on the call from HUD, your field office is downtown. We're very lucky to have such a great relationship with your office.
Thank you.
Okay, is Nikki Nice back on the call yet?
I'm here.
Yay! You've had such a long day, so I am so happy you're able to join us. And I don't even know, last time I looked, the council meeting wasn't over, so I don't even know if it's over now.
We're still going.
Oh my gosh. Okay, well, I'll be quiet then and let you share your thoughts and what you want to share with us tonight about being a homeowner, what it means to Oklahoma City, what you think it means to you.
Well, first of all, just thank you for the platform. And I think it's important for and a great time for us to get this information, especially with what's happening right now across our cities and our communities. Homeownership is definitely important for us to see that wealth for ourselves and our family. So again, thank you for putting this together, and I know it's being recorded, so I'm sure it'll be shared and that information will continue to be spread for those who need it the most. But home ownership is definitely important because, you know, while it's very important to be a renter, it's most important to be a homeowner, to have something that is yours. And one of the best things I love about the Strong Neighborhood Initiative and even the Community Action Home Buyer Program is the fact that they give you the resources that you need to help you get where you need to go. So they prepare you for that transition of going from that space of wanting to be a homeowner to how you're going to be able to do it effectively, to then when you're in that home, now what? If you need resources to get things fixed, or depending on what type of home you purchase, and obviously the down payment assistance. So I just want to thank everyone for taking the time to get the information, and also make sure you check out the new homes that we have in our communities, especially our Strong Neighborhood Initiative areas that are within Ward Class in North Highland Park, Capitol View, and Culbertson East Highland. I know Capitol View has construction on some beautiful homes that you're going to hear about real soon. And if you know someone that wants to live within Northeast Oklahoma City, please let them know about these homes. We want families to come back. We want to rebuild the community the way that we know it can be built. And it's going to take that information and us wanting to be those homeowners in our community. So once again, thank you for having this platform. And I know this is one of more and many conversations to come. So I got to go back to my council meeting, but I appreciate you all.
Yeah. Thank you so much, Nikki. You've been such a fantastic partner of ours. We really appreciate your leadership.
Thank you.
Thank you. Okay, without any further ado, we will start the bigger part of our presentation. And Torri Rodgers, who works she's a HUD certified housing counselor at NHS. She was scheduled to be with us. I think something came up the last minute, unfortunately. But we are so happy that Linda Rowe from her office has agreed to step in. Linda, are you on the call?
Can you hear me now?
Linda, yeah. All right. Okay,
yes, unfortunately, Torri had a very last minute issue come up. So She wishes she could be here, but she'll be here for some of the next ones.
Okay,
So-
wonderful.
Again, my name is Linda Rao. I'm with the, I'm the Homeownership Center Director for Neighborhood Housing Services. What I'm going to talk to you guys about today is just give you a quick basic overview at the home buying process. Again, we do offer HUD certified home buyer education workshops. We offer those 2 times per month, and that would be the actual full-blown 8-hour course and certification that would be required if you're going to be purchasing a home. Okay. Okay, so a couple of things to ask. Are you ready to purchase? Some of the steps in the home buying process is preparing for home ownership. That is one of the things that the home buyer education workshop is going to do. We're going to go more into depth as to looking at the different pros and cons to home ownership and whether or not home ownership is right for you. You know, we found that not everybody's ready to be a homeowner, or maybe you're not ready to be one right now, and that's perfectly okay. But we want you to have the education and the tools to move forward to be able to go through those purchases. Determining how much you can afford to spend. Again, this is very important when you're going through the home buying purchase and getting pre-approved for lenders and mortgage loans. A lot of times you'll find that what they're looking at to determine your income has nothing to do with what you pay as far as your daycare, homeowners insurance, how much you pay to charity, what you spend on groceries. And so it can be very realistic that you guys can afford get pre-qualified for a much larger home loan than what you can afford based on your guys' budgets. So the most important thing I will have to say to people is when you're going through this process, you need to start at where you're comfortable with a mortgage payment and go from there. You know, a lot of people, as a rule of thumb, will start with their rent payment. If that's not quite where you want to be, well, you can talk to your lender and find out, you know, your next steps. If you want to be able to if you need to maybe need a bit higher purchase price, then you can start budgeting and just to make sure that you're ready to do that. There's nothing worse than being house poor. I will tell you, I've done it before in my life. It is miserable. So just make sure that you're going into this with what you feasibly can afford to spend based on your budget. Next, make sure you're getting your loan pre-approved. So the big difference between that and a pre-qualification is you maybe are calling your lender and you're giving them information verbally over the phone, but they have not been able to actually verify that information. A lot of times, many people are on commission income or self-employment income, which can't always be counted the same way. So what you think you actually make is not what the lender can use to pre-approve you. So make sure that you're getting pre-approved first of all on your home loan, because there's nothing worse than finding a house, falling in love with it, and then finding out that you can't actually qualify to purchase the home. So this is just a very important first step when you're going through the process. Deciding what kind of home and what your wants and needs are. Where do you want your kids to go to school? What neighborhood is that? How many bedrooms do you need? A lot of things are really important to look at that when you're going into this, just so you have a better idea of where you want to look and what you're going to need in your home. I can guarantee you, as your family grows, as your family gets bigger and your life changes, some of your wants and needs are going to change throughout this process. So just get a really good base on what those are right now. And then shopping for a home, which is where you're going to be working with a realtor partner to look at homes that are available on the market that you might want to purchase. So your home buying team, first of all, that's going to be your real estate agent. Something to keep in mind that many people don't always realize is that if you are a buyer looking for a home to purchase, it costs you no money to utilize a real estate agent. Those commission fees are actually negotiated on the seller side. So I would encourage you to make the most of that. They have great resources as far as properties that are available. You know, they've been in the business for a long time, you know, they might be able to kind of help you with those wants and needs. And then I also kind of give it a first overview of when you're looking at the condition of a house. You know, you may be looking at the pretty walls and the pretty carpet and where you may want furniture to go. But your real estate agent's going to be kind of looking behind the scenes, seeing if they can see of any evidence of water leaks, different things like that. Your lender, obviously, they're the ones that, you know, at the end of the day that will be funding the loan. Your escrow officer. So when you close on your mortgage loan and you go to sign all of your paperwork, you're going to do that at an escrow closing company. So there's two different things that happen there. The first is when you actually go to sign your loan documents, you're going to be working with an escrow officer. An escrow officer is a neutral third party that performs tasks that include preparing your escrow instructions, your closing documents, holding and dispersing funds, preparing title documents, and obtaining your guys' signatures on your paperwork. And then also making sure that those are all properly notarized and documented. Your title loan officer, what they're doing is they are actually reviewing the any type of claims that might jeopardize a buyer's rights to purchase property purchased in a real estate transaction. So they're looking at the title on the property to make sure that there aren't any outstanding liens that might hinder. What happens is when you purchase, once you go through this and you close, you're going to actually get what is called owner's title insurance. And what that does is it protects your ownership of the house from the day that you purchase prior. So if the title insurance officer did not there was a lien out there that they did not discover, it's actually the title insurance responsibility to make sure that is taken care of on your behalf, okay? Your housing inspector, that's going to be your home inspector. Your home inspector, what they're going to do is you're going to hire them. Again, they are a third party. They are not getting paid by the lender or by the realtor. They're going to go in and they're actually just going to look at many different aspects of your home. This is a very large piece of when you're purchasing a home. So I will always tell you that is very important to get a home inspection. If anybody tells you that you can skim, you know, you can save money by not getting your home inspection, I will tell you to work with a different party because there's nothing more important than getting that third party home inspection. Your appraiser. Your appraiser is going to go out. They're actually hired by, it's your appraiser, but it's actually ordered by the lender. And they're actually going to go out and do an appraisal on the property to make sure that the home is worth the value that you're paying based on your purchase contract. Your surveyor is actually hired by the title company. They're actually going to go out and work with county offices, and they're going to conduct searches, and they're going to do some different surveys just to make sure that your properties meet the boundaries identified in the easements and encroachments that may affect title on your home. So they're just making sure that that property actually meets all the meets and bounds. Your homeowner's insurance agent. This is something that I'm going to recommend that once you start this process, you want to start looking at your homeowner's agent and getting homeowner's insurance quotes right away. I always recommend getting at least 3 different quotes because insurance can vary greatly from coverages to even the cost. It's always a good idea to start with your insurance agent that maybe has your car insurance because a lot of times when you have home and auto insurance at the same company, you actually get discounts on each of those. Your housing counselors at neighborhood housing services. Keep in mind as you're going through this process, whether you're getting one-on-one housing counseling, down payment assistance, or anything like that from our agency, we are an advocate for you. Again, we are a third party. We do not have any skin in the game. And we have people that will call us all the time. Many times something is not right and they weren't sure. And so we've been able to kind of help spearhead that and get them in the right direction. Other times it's just a process, you know, part of the purchasing process, and it's very normal. So just please know that you can always reach out to us free of charge, ask us any questions that you might have, and we'll be happy to answer that. And even if we need to do additional insurance, we'll be doing that as well. We are HUD certified, and Sharon in her office, again, they're also great advocates for us. You know, if we have a question that we're not actually, you know, not necessarily sure of, but HUD is all about protecting you guys as home buyers. And so it's just really important to know that. So, you know, one thing that, oh, are you guys there?
Yeah, we can still hear you.
Yeah.
Okay, my computer just popped off, so give me just a second. I apologize. Where did I go?
The next slide was about credit and why is keeping your credit good? Yeah, yeah.
So, credit, you know, good credit is hugely important, especially when it comes to purchasing a home. The better your credit is, the higher your credit score is, the better interest rates you're going to get. And even a lot of your closing fees may be a lot less. Some of the other issues as far as why good credit is important, obviously it's going to help you establish a checking account at possibly more favorable terms, establish utility services in your own name, to obtain getting your insurance via homeowners or automobile insurance at a lower rate, getting approved for car loans with lower interest rates and more favorable payments. And more often, employers may check your credit to see if a potential or current employee is financially responsible, typically like with executive positions. That is one of the things that they will look at, or banking positions. You know, they want to make sure that there's not so much of a risk there. So those are some of the places that can check your credit report. So reviewing your credit report, you can get your credit report through annual credit report. I believe you can get that 3 times a year through annual credit report. It's not going to have your credit score, but it's very important that you're reviewing your credit report to make sure the information on there is accurate. It's amazing sometimes when somebody will maybe have come in to apply for a loan, and the lender ends up sending them to us for some credit counseling, and lo and behold, there was some, you know, collection or judgments that just showed up on their credit report that they had no idea were there. So it's just hugely important to make sure that what is on your credit report is accurate. There are ways to dispute inaccurate credit. Our agency is happy to help you with that as well. You just know that it is very important to make sure that you are just reviewing that. There are 3 different credit bureaus: Experian, TransUnion, and Equifax. And a lot of times what we will recommend is through annualcreditreport.com. If you go in once every 4 months, and you can review each one of those credit reports individually, and to get a better, you know, thorough review of what your credit is. Your credit information is listed. It will show your payment history. It will show the number of late payments you have had. It will show the last number of late payments. Your credit information will also show what the current balance is. Other things that will show on your credit report are public records. So that would be collections, some judgments, things like that. And then inquiries. So anybody who has looked into your credit report in the past 12 months will actually show us an inquiry. And I want to touch on that really quick, because a large misconception is an inquiry is automatically going to lower your credit score. The only time your credit score is lowered by an inquiry is if it's an inquiry that was made because you applied for some type of credit. So if you come to our agency for pre-purchase counseling, the credit report that we pull is not going to have any bearing on your credit score, because it's for informational purposes only for you. Getting a mortgage loan, research. I would say research banks, credit unions, brokers, mortgage lenders. Many of the different types of lenders will have a lot of different rates and a lot of different fees. It's great to have referral sources such as a realtor or something like that, but I always recommend that you get at least 3 different pre-approvals from 3 different institutions, just so you can compare those, just to see where interest rates are at and where fees are, because they can make a pretty big difference. Completing a loan application. So we talk about you're getting a pre-approval. You're basically going to be completing your loan application at that time. The biggest difference is your pre-approval stays in approval until you actually find a property purchase. Then once you sign a purchase contract, it actually becomes a loan application. The loan application process, this is important to understand as well. So your loan officer is going to meet with you and review your credit, review all of your information. And then what happens is that your information actually goes to a loan processor. And that this is somebody that's going to work from the financial institution, and they're actually going through and collecting all of the documents needed to meet all of the requirements on that loan, because many different loans will have many different types of requirements. So a lot of times as you're going through this process, you may hear from your loan processor, 2 months down the road saying, I need this. And you're thinking, why in the heck do you need that now? And it's simply because a lot of the documents that you provide at the beginning all have expiration dates on them. They're all good from typically 90 to 120 days. So you may have to update some of that information going forward. Once the loan processing is done and they've gotten the appraisal, they've gotten your title commitment, then the last step that happens is it actually goes to underwriting. And the underwriter actually performs the critical evaluation of the creditworthiness of a potential customer and whether, and the loan. They evaluate your credit history. They're also making sure that all of the requirements for that specific loan, as far as some of the underwriter requirements, are met. Once that has been satisfied, then they actually will do an approval of the loan. And then at that point, your loan paperwork actually goes to a loan closer at the financial institution, and they're actually preparing all of your mortgage documents to get ready for closing. The other thing that they are doing is they will actually be preparing what is called a closing disclosure, and that is an estimate of your final closing fees and costs on the loan, and they're required to give that to you 3 days prior to your closing. So different types of mortgage loans, government loans and conventional loans. Again, the most common type of loan you're going to hear about is an FHA loan. An FHA loan is a government-backed mortgage insured by the Federal Housing Administration, or FHA for short. It's very popular with the first-time home buyers because they have lower minimum credit score requirements, and they also typically have the lowest down payment requirements. FHA loans come with fixed interest rate loans. They can be 15 or 30 years. There is an upfront mortgage insurance premium of 1.75 of your loan amount, and that's paid when you get the mortgage loan. Typically, though, that is rolled right into your mortgage amount, so it's not necessarily an additional closing cost you would have to come up with. A VA loan, this is also a government loan backed by VA. This is available to veterans, reservists, active military duty, or even surviving spouses of veterans. The VA loan is typically considered the best loan option out there because there's no down payment and no private mortgage insurance, and they actually have flexibility with credit scores and some additional things like that. USDA is a loan that if you are looking at purchasing rurally, it's actually a great program for you. So USDA loans, again, they are a loan backed by the U.S. Department of Agriculture. These loans are great if you're interested in purchasing a home in a smaller rural or eligible suburban community, since USDA loans provide the opportunity to own a home in those areas at affordable rates. Smaller rural doesn't necessarily mean a farmhouse. It just means the neighborhood has to be under a certain population that qualifies as rural. And some areas are surprisingly suburban. Shawnee, Oklahoma is considered eligible for rural development. Guthrie is considered eligible for rural development. So there is an actual website through USDA that you can go on and look at the property eligibility areas. If you have the address, you can type it in there and it will tell you. Otherwise, they actually have a great map that you can actually kind of score down on to look at the areas that are available under the USDA loan. The other nice thing about the USDA loan is they provide 100% financing. And again, there's no monthly mortgage insurance that you might have to pay. So conventional loans, conventional loan is a loan that is purchased by Fannie Mae or Freddie Mac. It typically requires a minimum down payment of 3.5% to 5%. A credit score of at least 680 is typically preferred, and sometimes they can actually require a higher credit score than that. Again, the higher the credit score, the lower the interest rate on the loan, and the best terms being reserved with those over a credit score of 740. One thing that they will look at with all loans is an acceptable debt to income ratio. What your debt to income ratio is the sum of your monthly obligations, including your mortgage, housing payments, compared to your gross monthly income. Typically that round number for that is around anywhere from 36 up to 43%. That can change a little bit just depending again on actually how good your credit score is. Sometimes the higher the credit score, the higher they'd be willing to go up on your debt to income ratio. And for conventional loans, unless you have a down payment of at least 20%, the lender is always going to require that you have private mortgage insurance on the loan, and it will pay its monthly premiums until you reach at least 20% of the equity in the house. So it's going to make your payment a little bit higher because you do have that mortgage insurance unless you have 20% down payment. Shopping for a home. Again, a real estate agent is an individual who's licensed to negotiate and arrange real estate loans for commission. The seller usually pays the commission of both the buyer and the seller realtors. Initial offer letters. A real estate agent will consult with a home buyer to determine a price to offer to the sellers. The buyer's real estate agent writes a sales contract stating that determined price and gives it to the seller's real estate representative. Negotiations. Sellers may not accept the buyer's initial offer, decline the initial offer, or make a counter offer. Sellers may adjust the time frame of closing or ask for a higher price. The realtor will help you navigate this process. And then once you go into the other part of going into a contract is you are going to give them an earnest money deposit. That's basically considered a good faith money. It actually is telling them that you are serious about purchasing a house and you have skin on the game. Buyers and sellers reach an agreement on the price of the terms of the deal. The buyers will give the sellers a check to prove, again, the buyer's sincere intent to purchase the home. It's typically 1% up to 2% of the sales price, but it can always be negotiated. If for some reason you have home inspections and there's something that comes up in your home inspection and you decide that you do not want to purchase the home because of something from the inspections, then you can actually cancel the contract and get your earnest deposit back. Again, I've talked about this a little bit earlier. A home inspection gives the buyer more detailed information about the overall conditions of the home prior to purchase. In a home inspection, a qualified inspector takes an in-depth, unbiased look at your potential new home. You must ask for a home inspection. It is not required. It is important for you to decide on this early. You have so many days to get a home inspection done. And so it's something that you'll want to decide on quite early in the process. You can also make your contract contingent upon the results of the home inspection. So if something comes back in the home inspection, again, that very much concerns you, then you can cancel the contract and get your earnest deposit back. So some of the things that are looked at in a home inspection: structural, they're going to look at your foundation, your roof, your doors, windows, ceilings, walls, floors, mechanical, plumbing, electrical, heating, air conditioning, insulation, ventilation, and septic systems. I will say one thing that a home inspector cannot look at is something, let's just say, if they can't really look behind your washer and dryer because they cannot move that type of furniture. And there's a liability issue there as to why they can't do that. The day of the inspection will typically take anywhere between 2 to 3 hours for an average single family home. Expect more time for larger homes. The cost of the inspection varies per home inspector. They can run anywhere between $250 to $500. Make sure you ask ahead of time what time your home inspector will make sure they are able to accommodate your needs based on the home that you have. The home inspection is a limited inspection of the property that describes the condition, not guarantee full condition. And you can go to your home inspection, and I highly recommend that everybody does go to their home inspection because it's a great way to get to know your home. Your home inspector will show you where your shut-off valves are, where your breaker boxes are, where your connections to, plumbing, gas, all of those things. They will even show you on your hot water heater where the pilot light is and how all of that works. So I really highly suggest that you go to the home inspection because it's just a great way to get to know the house that you're purchasing. And that is it.
Okay. Thank you very much, Linda, especially for filling in for Torri. I'm sure those were big shoes to fill. We appreciate you for stepping in. This is Torri's contact information, her phone number, as well as their website. You'll get another chance to see this contact information towards the end of the presentation. If there are any questions, you can here after the insurance portion of the presentation, we'll have an opportunity to get to get at least some of the questions answered. And you can also ask your question over in the Zoom chat if you want to. Did you have something else, Linda, that you wanted to share?
No, I was going to say that my telephone number is the same. So just ask for myself or Torri, and we're both more than happy to help out.
Wonderful. Well, we really appreciate you guys. NHS has always been a great partner of ours. They build homes, they provide DPA, they do housing counseling. They rehab homes from time to time. They do a little bit of everything when it comes to housing. So they're a fantastic nonprofit here. And again, you'll see more contact information for them later on. For those of you who may have joined us a little bit later, if you are on the call and you would like to see this presentation, it is on our website right now, which is www.okc.gov/SNI. And SNI is Strong Neighborhoods Initiative. And this is Sharon Ince talking from the city of Oklahoma City. And again, www.okc.gov/SNI if you're listening in and you want a copy of these slides. Next up, we have Andrew Pearson, and he's going to share a wealth of information about homeowners insurance. And I'll just let you get started, Andrew.
All right, thanks a lot, Shannon. Before I get into the heart of it, I will say that I do appreciate the heart behind this initiative and everyone on this call and what we're collectively trying to accomplish there in the east side of Oklahoma City. So kudos to everyone here.
Thank you.
So again, my name is Andrew Pearson, and I am the agency owner of the Andrew Pearson Insurance Agency. We are in Dale City, Oklahoma. Today, I will give you a brief overview of the insurance purchasing process, which you'll find out whenever you get to the point to where your lender is telling you to look for insurance. Generally, that means you've completed a lot of the upfront processes and you're just about clear to close. And so what happens generally is that you have home buying fatigue. And this is the part where I see that people generally just hop online to get a quote, you know, and they get a few in their inbox and then they choose one. I really, really want to encourage you to spend time whenever you're looking for an insurance policy, because insurance is like anything else you buy. You get what you pay for. And I mean that in the most literal sense. So I'll get into the presentation and I'll touch more on that. And so what home insurance is, it's risk analysis. It's a home insurance company deciding based on your criteria, based on your credit, based on the home you're buying, and based on where you're buying it and other factors, how they consider you how risky you are. And that's one of the reasons why you have, as Linda said, insurance prices vary widely in most cases, because what's happening is some companies consider you more of a risk than others based on factors that you're presenting and based on what's important to them. And so that's why you have varying prices, because different companies see you as a different risk based on your profile. I will point out here, and if you can see this, you see in the very bottom, understand that insurance is a legal contract, and it transfers risk from you, the homeowner, and the policyholder to the insurance provider. And so oftentimes, whenever you hear someone saying that they were treated improperly by an insurance company, what happens there is that the homeowner didn't understand the insurance contract, and or the insurance contract wasn't adequately explained by the agent to the homeowner. And so that's why it's so important to make sure that you're not really shopping online for home insurance, or that you're going and you're sitting in someone's office across from them so they can really show you what you're getting. You go next slide, please. And so why is it important? I really talked about that, just the risk analysis. They're determining how risky they are in their eyes. Next slide. And so what are some of the risk factors? You see here the type of home that you're buying. And I know everyone can't see this, so I will try to mention all of them. The type of home that you're buying, for our purposes, most people will be buying a single family home. And what that means is that it's a home that you only intend for yourself and or your family to stay in. The square footage, meaning just how big. The address, the city, zip code, and county matters for two reasons. It matters because they will look at what the crime rate is in that particular zip code, and also they will look at what the storm patterns are over the last few years in that particular zip code. So for example, if you live in the Moore area, you may pay more for insurance if you took that same house and you moved it to an area that's not as prone to storms. But on the other side of that, if you're buying a home in a high crime area, or if the company considers it a high crime area, because there can be some variance there, then you could pay a little more depending on how each company evaluates that. Pets, depending on the company, they could say you can have certain breeds, or they could charge you more for certain breeds of dogs, and or they could say you can have your dog on the policy as long as it doesn't have a verifiable bite history. And so that's a consideration. I will tell you, if the insurance agent or the insurance company don't ask you if you have a pet, it's kind of a good indicator that they're not really looking out for your total situation, because your answer could be no, but what else are they not asking you? Because whenever it comes to home insurance, that's really a big deal when it comes to the potential liability that you could have. A pool, also a trampoline, needs to be notated on the policy. The age of the roof is obviously a big deal. The type of roof is a big deal. And I have renewal next to that because, we know that every year your insurance seems to go up. I can tell you, believe it or not, sometimes it does go down because the factors kind of even out. But one of the reasons that when it goes up, because the roof of a home is the most likely claim that you will ever make, will be a roof replacement. And so as your roof ages, the insurance company knows the likelihood of a claim being filed increases because the roof is getting weaker, kind of like our body. So as we get older, things happen easier than when we were younger. And so your roof is the same way. And so as your roof ages, your insurance tends to go up. If you have a business on your property, what's really popular is making t-shirts in your home and all that stuff. That needs to be disclosed. They're on the right side, personal property, including furniture, electronics. They look at the home safety features. If you have a security system, if you have a sprinkler system, if you have high impact shingles on your roof. As Linda mentioned, the credit rating matters. Generally speaking, when an insurance company pulls your credit, they do a soft pull. And so it's not one of those inquiries that will impact your credit, but it matters because in theory, they look at the higher your credit score, the less risk you are. The lower your credit score, the more risk you are. And/or the higher your credit score, in theory, the more money you may have in surplus or in savings. And so you may be able to take care of some of the small things that could be an insurance claim without getting the insurance involved. Your prior insurance history is a risk factor, even for your car insurance, because whenever an insurance company rates your home, they're actually doing cross-line rating. So they're looking at kind of what's happening in your car insurance history as well. And so obviously if you have a lot of accidents, well, that's a given. But if you're a person that's switching insurance companies every 6 months, every year or whatnot, that could negatively impact what they call your insurance score. The construction type matters, whether it's brick, whether it's frame, whether it's vinyl siding or wood siding or whatever the makeup is of the exterior of your home matters simply because the makeup determines what the home can withstand in regards to Oklahoma weather. And then again, obviously the roof type matters. For our purposes, most roofs will be shingle roofs, but then we do have tile roofs and metal roofs and so on and so forth. Why do you need it? And so the obvious answer is you need it because you're trying to buy a house and it's a requirement. But what I'm telling you is that the home that you buy is likely the biggest purchase you will ever make. And so you need to protect that. And I point out this because whenever you go to buy a home, the lender will make sure that you have a policy that protects your loan. That doesn't always mean that it's a policy to protect your full investment, because the reconstruction value of a home oftentimes is more expensive than what it would cost to pay your loan off. Your loan may be, $100,000, but to rebuild that home, it may cost $120,000. And so you need insurance to not only satisfy your loan requirements, but you need insurance to protect your investment. And key coverages, and so pretty much with every company across the board, you will have a coverage A through coverage E. Coverage A is your dwelling, which is the home itself. Coverage B is your other structures, meaning something on the property, generally a detached garage or a shed or something of the sort. Your personal property, anything take with you if you were to move, so your clothing, your furniture, your appliances. A loss of use, which is coverage D. Anytime you hear about someone say, we have this issue and the insurance company brought us a check that night, within 24 hours, they're talking about the loss of use money. The loss of use money is the money that you can use when you're displaced, whenever you can't live in your home. And so it's for food, clothing, and shelter immediately until, they can get the insurance coverages worked out and they can get the adjuster worked out. But you need somewhere to stay tonight and tomorrow. That's what that's for. Personal liability is your legal defense and/or medical expenses of someone else. Keep in mind that once you buy a home, anything that happens on your premises can be your responsibility, whether you are really responsible or not. If someone is walking across your lawn and they fall, it can be your responsibility. If you have a neighbor's kids over and they're playing in your backyard and they're hurt, that can be your responsibility. Trampolines, pools, anything, if a kid is climbing in your tree and falls out and you are not even home, it's ridiculous. Common sense says it's not your fault, but insurance law says that you can be held responsible. And so the personal liability portion is an important part of your insurance policy, so don't overlook that. And then deductibles, which is your financial obligation before a claim is paid. On a home insurance, that can be split or it can be one number. You can have a wind hail deductible, which will be a separate amount from your all perils or other perils. Know this, your wind hail deductible is one of the biggest indicators of what you will ultimately pay in insurance, simply because the insurance company knows that a wind and hail claim is the most likely claim that you will make. And so before I get there, one thing not on the slide as we get to these last few, Linda mentioned to get 2 or 3 or maybe 3 or 4 quotes, and she's absolutely right. But understand that we have something called admitted companies and we have non-admitted companies. The difference is that if they are an admitted company, it means generally that they are highly regulated by the state government and they are backed by the state surplus guarantee line. And what all that boils down to is, for some reason, that insurance company runs out of money, the state will step in to pay your claim, and then the insurance company can work out with the state how to pay the state back. If that company is non-admitted, that means if that company runs out of money, you're kind of on your own. And so just keep that in mind as you're shopping for insurance. And if you find this company that you're like, I've never really heard of them, it may be a good question to ask, is that an admitted company or not? We can go to the next one. And so one of the, well, matter of fact, the biggest and most important aspect of your policy will be making sure that it is a policy that's RCV, or other words, replacement cost value, as opposed to ACV or actual cash value. When I say you get what you pay for, a lot of times you see these policies like, man, that policy is a lot cheaper than the other one. Well, sometimes within that underwriting and within the fine print, you will see that the policy is actual cash value. And what that means is that they will depreciate your property and only give you a portion of your claim. If you can see my screen here on the left, you see that it's an example of replacement cost. And so what you're looking at is that we're assuming that your deductible is $2,000, and we're assuming that your roof replacement is a total of $20,000. In the scenario for replacement cost value, you will pay your $2,000, and the insurance company will pay the rest, the $18,000, to get you a new roof. On the right side there, in a scenario of actual cash value, you pay your $2,000. The adjuster comes in and says, based on the age of the roof and the condition at the time of loss, they're only going to give you $12,000, so which gets you to $14,000. Well, you still need $6,000 to replace your roof, and that $6,000 will come out of your pocket. And so it is very, very, very important to make sure that your personal property, your roof material, and the actual dwelling itself is at replacement cost value, or RCV, so that way you know for sure what would be your out-of-pocket if you ever had to file a claim, especially for a total roof replacement. And so that's really the quick overview. Again, my name is Andrew Pearson. I know we're about to have a question and answer session here next. And so my contact information I can put in the chat, but also it'll be on the slides if you look at them up online, or if you can see this presentation now. Thank you.
Thank you, Andrew. We really appreciate it. I learned so much just now. I've been taking some notes. I really appreciate you. And so this is a point we have a few minutes here to answer some questions, or to ask some questions of Linda and Andrew. Does anyone have something? You're welcome to unmute yourself. If anyone has any questions.
I'm unmuted, Shannon.
Okay.
I know that's dangerous. It's dangerous when I'm unmuted, but I have a question for Andrew. One, thank you for, my business partner in my other life is an insurance agent, and I yell at him all the time, but that's really, really helpful. We're building several houses in a couple of neighborhoods, but we were able to get a grant to do fortified roofs on our homes in Capitol View. And I'm really, really proud of that. And I know that it will help lower the insurance rate. The cost on those, and I know there's different ratings. One is for high wind, which is what we have mostly here in Oklahoma. We have a few hurricanes, although I'm kind of sure that we had one back in January, February. But on if we have a fortified roof designation for high wind, on average, do you know how much that would save the homeowner? Because I want to continue doing that on the homes that we build.
Well, when you say designation, are you talking about a high impact shingle or impact resistant shingle?
Yes, IBHS, fortified roof, certified.
Right, and so if it's classified as class 4 or class 3 shingle, it generally will save you between 15 and 20% on the homeowner's insurance, but it really depends on the insurance company. But generally, excuse me, you will find it between 15 and 20% because again, they know that a roof claim is the most likely claim you will make. And so if you have a roof that's high impact resistant to that, then it will save you quite a bit of money.
Right. We've got wind and hail, and that's what we have mostly in Oklahoma.
Mhm.
And basically, it's not even a more expensive shingle. It's just the way that the actual roof is put down. You know, more nails per foot. It is a membrane, a drip edge, a good shingle, because what the insurance companies know, and you know, we all have to replace shingles. We all have to replace a roof. The real damage, the real expensive damage is if water gets in the house. So if we can do everything we can to keep water from getting into that roof and down into the sheetrock and causing, the bigger things. But 15 to 20% is huge, I think. Thinking about my personal, not health insurance, but home insurance. That would be a big difference to homeowners. So anyway, thank you for answering my questions.
Absolutely. And Shannon, if I can add something to that, again, the insurance company they would want to see that it's class 3 or class 4 shingle for the impact resistant. But you mentioned water getting in. Water claims are the most denied claims that you will see when it comes to insurance. And so what you need to know is that an insurance policy is not covering maintenance. And so generally when it comes to water, it has to be, as it is stated, a sudden overflow or entering of water. If you have a roof leak and it goes over time and you don't address it, that claim could be denied because you didn't mitigate the damage and keep it small. You let it grow to something big. And so if you have any type of leaks, especially if you look at your ceiling and you see the brown spots, it needs to be addressed now. If you have leaks, forget the roof, you have leaks anywhere in your home and it's small, you need to address it now, because if it gets big and the insurance company comes in and they determines that it was going on over time and you didn't address it, it will be a denied claim 9 out of 10 times, if not 10 out of 10, but you never want to be absolute.
Thank you for answering those questions so thoroughly. Does anyone else have any questions?
Hey, Shannon, I just wanted to make a comment and with what Andrew had said. He is absolutely right. When you are looking at your shopping for homeowners insurance, you don't want to dial for pizza. You want to sit across the desk from somebody. And that's the same when you're getting a mortgage loan. You do not want to dial Rocket Mortgage. You want to work with a local lender that you can actually talk with face-to-face. A couple of different things, and Andrew will probably say the same thing. Oklahoma is very different from a lot of other areas. And so we may have things that are very different here that are not going to be completely different from somewhere, that's a national chain. So it's just hugely important to make sure that you are working with your local companies when you're doing this, and you're just not, trying to do it via online or 800 number.
Very good advice. Very good advice. Well, if we don't have any other further questions.
I have a question, Shannon.
Okay, wonderful.
Sorry, I joined the presentations very late, so this might have been covered, but any conversation regarding pre-qualifications and concerns as to doing a pre-qualification and the impacts on a credit score? So if somebody's trying to, try to keep their credit score high, but they might want to just touch the waters to see if they qualify for a home loan at this time, but then concerns about
I can answer that. This is Linda. First of all, when you are shopping for maybe a home loan, or let's just say even a car, there is a window. The credit companies know that through all of their algorithms that you're shopping. And so there is a small window of time where if you're looking at three or four different lenders, it's not going to affect your credit score. And then the other part of that, which is hugely important, is make sure you're doing a pre-approval and not a pre-qual. Make sure that your lender is reviewing all of your income and asset and bank statement information so they can give you a solid pre-approval. I just had a friend of the family that was pre-qualified for $130,000 until they reviewed her income and realized that she had gone on commission 2 months ago. So now she no longer qualifies. So it's just hugely important that you're getting all of that information to your loan officer early.
We might have lost, oh, there she is, okay.
So for clarification, you said it's better to do a pre-approval before you do a pre-qual or pre-qualification?
Yeah, don't even necessarily do a pre-qual. A pre-qual is just when you call a lender up and you're going over your information verbally, but they have not reviewed anything.
Okay, thank you.
Mm-hmm.
Okay. Any other questions? Again, for those of you who've joined us a little bit late, you're welcome to see this presentation at www.okc.gov/SNI. And you're also welcome to add some questions to this Q&A. And this presentation is being recorded. So if you missed something, you're welcome to go back and listen to this later. Hopefully we'll figure out exactly how to get that to you guys, get you access to it. Next, we want to talk with attorney Alejandra Johnson. She is from Metro Fair Housing Council. The City of Oklahoma City has a long-standing relationship with Metro Fair Housing. They're a fantastic agency, and without further ado, let's hear from Alejandra. It's very important information about predatory lending.
Hello, everyone. Like Sharon says, I'm Alejandra Johnson. Thanks for having us tonight. Before we get into the meat of the slides, I want to talk a little bit about fair lending as a whole, and then we can get into the slides on predatory lending specifically. Okay, so what's fair lending? Fair lending prohibits lenders from considering your membership in a protected class when applying for a residential mortgage loan. So protected class, what is that, you might ask? There are 7 of them under the Fair Housing Act. They are race, color, religion, national origin, sex, disability, and familial status, okay? Is there a law that protects my fair lending rights? Yes, there is. The Federal Fair Housing Act is also known as Title VIII of the Civil Rights Act of 1968, amended in 1988, and it protects your fair lending rights. There are other laws, including the Equal Credit Opportunities Act, that protect your lending rights as well, but those laws are not enforced by HUD, and so we're a HUD-funded agency, so when you come to us, that's what we look at first, are the laws that are enforced by HUD, and then if we have to take it beyond that first step and go to federal court with it, that's when we would bring in the other claims like the Equal Credit Opportunities Act. So the next question you may have, if I'm not from the United States, does the Federal Fair Housing Act protect me? The answer is yes. Absolutely, it does. Whether you're a U.S. citizen, a registered alien, or in other words, a green card holder, or an undocumented resident of the United States, you are protected by the Federal Fair Housing Act. So how can the Fair Housing Act protect you when you purchase a home? The Federal Fair Housing Act makes it unlawful to discriminate in the sale, rental, or financing of homes based on your membership in those 7 protected classes that I mentioned earlier. I'm going to go over them again because it's just that important. Race, color, national origin, religion, sex, familial status, and disability. Those are our 7 protected classes. So let's talk about some examples of discriminatory lending practices. A lender commits discriminatory lending practices when he or she acts in one or more of the following manners. 1, would be to refuse to make a mortgage loan on the basis of your membership in protected class. The next would be to refuse to provide information regarding a mortgage loan because of your membership in a protected class. Another way that a lender might be committing a discriminatory act would be to impose different terms or conditions on a mortgage loan. So some examples might be different interest rates, different points, or fees. And when we get into predatory lending specifically, we'll talk more about that, okay? Discriminating in the appraisal of property, that also would be an example of a discriminatory lending practice. Sometimes we see that when it comes to the appraisals of properties in certain neighborhoods. Sometimes they'll call an area blighted and a property that may be worth, you know, $250,000, if it was placed somewhere else, they'll devalue that property and appraise it for less, which means that it makes it more difficult for you to get the kind of lending that you need, the kind of loan that you need on that property. Another example would be to steer an applicant towards a bad mortgage loan product. Usually it's based on an assumption that you may have poor credit due to your membership in a certain protected class, whether that's race or whether that's based on your sex or whatever the case may be. Another example would be to provide an inferior servicing of a mortgage loan, okay? And we'll talk about it when we get into predatory lending. You'll get some examples. Can a bank officer commit lending discrimination? Yes. Any lender, real estate or mortgage broker, appraiser, loan servicer, or title company can commit lending discrimination in any phase of the mortgage loan process. So that means from the start to the end of your home buying process, you are protected under the Federal Fair Housing Act. And if you feel that you are being discriminated against during that process, whether it's through your mortgage lender, your broker, your appraiser, your loan servicer, even down to closing with that title company, if you feel that any of those actors in the process are discriminating against you, please report it immediately. You can report it to us directly at Metropolitan Fair Housing Council of Oklahoma, or you can report it to HUD or any other state or local fair housing agency. So let's talk about when lending discrimination occurs. I told you it can be at any step during the process. So but it can also happen if you're refinancing. So whether you're purchasing for the first time or refinancing a current home loan, lending discrimination can occur at any stage. So for example, if a lender refuses to make a mortgage loan because of your race, or if a lender charges excessive fees to refinance your home because of your race, those are both examples of violations of the Federal Fair Housing Act. So those are both examples of unfair lending practices. Now let's talk about some warning signs of lending discrimination. The first one would be, it could be blatant or subtle, by the way. So it can occur in the marketing of your mortgage loan products. Often we see that where certain kinds of loan products are marketed in specific areas based on what a company's perception is of individuals who live in that area. So it can occur in the marketing of mortgage loan products, during your mortgage loan transaction, terms and conditions of the loan, appraisal, servicing. Be aware and look at this as a red flag if you see aggressive solicitations of adverse terms of credit targeted to a minority neighborhood. So that means bad credit, no credit, like how those car lots do on those commercials. Bad credit, no credit. All you need is a pay stub. If someone is marketing to you in that way, chances are it's going to be a predatory loan and they're going to engage in some kind of unfair lending practice. Don't fall for it, okay? Also, another example would be of a red flag for you would be if you are being steered to a high cost lender, racial steering to high cost lenders specifically. That is something that we see more often with people who are targeting the Hispanic community. They will steer those individuals to higher cost lenders and lead them to bad loans by playing on the fact that someone may not have all the documentation that they deem necessary. But the truth is the Fair Housing Act protects you whether you are a documented U.S. citizen or a person who is here without all of the documentation to be a U.S. citizen, okay? Now, let's talk about some other examples, terms and conditions. Unnecessary closing costs, inflated appraisal costs, unnecessary recording fees, changing mortgage loan terms at closing without consent. So if you are talking to your lender, and when you get to that table at the end, the terms look different from what you've discussed with your lender, that is a red flag. You probably should not proceed with closing. And then excessive prepayment penalties. If you see that as a term of your mortgage, that's a good indicator that it may be an unfair or predatory loan. In the appraisal of a home, be aware of properties that are undervalued because of the race or nationality of either the borrower or of other residents in the surrounding neighborhoods. I talked about that a little bit earlier. I alluded to that. So when people look at those homes in areas that they consider to be blighted, and then they devalue the home, you don't want to engage with those lenders. Now, let's talk about servicing. Be aware of collection and foreclosure processes that are applied because of race. That happens from time to time. Also, learn about lending documents, their purpose, and how you can be assisted in the lending process so that you can increase your awareness. There are some really good guides on the HUD website. If you want to look at those, that might help you. Now I'm ready to get into looking at the predatory lending practices from the beginning. Okay. What's a predatory loan? We kind of talked
Sorry about
it.
that. I wasn't sure if you were already going through it, so I wanted to make sure. Okay.
What I had, like the brief overview, it doesn't really follow slide by slide, so I feel like the information in the slides can probably stand independently.
Okay.
But I'll be quick. So what's a predatory loan? Any loan that has a higher interest rate than average, okay? So, or a loan that has a higher APR or annual percentage rate. There's a difference between an interest rate and an APR. So the annual percentage rate, that goes lumped into a category with your front-loaded fees, prepayment penalties. These are the other things outside of that interest rate with your loan. So we talked about the violations of the Fair Housing Act. We can go to the next slide. So remember, your interest rate is what it costs you to borrow the principal of the loan. And then your APR includes all the other costs like closing costs, broker's fees, loan origination fees. Predatory loans, the APR is often loaded. So they'll tell you that, first of all, interest rate itself, if it's something that's insanely high, right now interest rates are at an all-time low. I don't know if we discussed that earlier in the presentation, but they're at an all-time low. We're talking like 1%, 2%. So if you're being quoted an interest rate that's 5%, that is already a red flag. Now that exists separately from your annual percentage rate. Those are all the other fees. If those fees look outrageous or outlandish, you're probably about to fall victim to a predatory lender. They'll offer you a loan that's too good to be true. So sometimes they're targeting minorities, the elderly, or women with home offers, and they're going to be selecting by zip code. So that's back to that bad credit, no credit scenario. And then they also assume sometimes that women don't have good credit or that they don't have good knowledge of the lending field. And so they can jump right in and capitalize. Next. So some examples, more examples of predatory lending practices. An offer by a lender to make a loan regardless of bad credit. That's number one. An offer by a lender to finance your mortgage loan for more than what you asked for. I actually got a call about this earlier today. A lady told me that she wanted to know if it's possible to finance her student loan debt into her mortgage so that she can, walk away with that debt being totally dissolved. If you have a lender that's letting you do that, run. No, you should not do it. Run. So an offer by a lender to finance your loan for more than what you asked for is a bad deal. Offer by a lender to finance your mortgage with a small monthly payment, though the rates are variable and the loan has a huge balloon payment at the end. So a variable interest rate used to be a common thing. Now it's less common because often those turned into predatory loans. Because what happens is you let a person who may not be 100% credit worthy, you give them that mortgage loan and there's a really low monthly payment on an amazing home. Well, in 3 years or 5 years, a balloon payment is due. So you've been paying, you get a $200,000 home and you've been paying, $500 a month, which is really affordable for you. But in 2 years or 5 years, whatever's left on that note, which is probably going to be a good $180,000 or $190,000 is due all at once. And it forces you to go and refinance because it's going to be difficult for you to pay off that balance, assuming that you needed this loan in the first place. You're not going to have that 180 grand lying around in your bank. And so it's going to be difficult for you to pay off that balance, and you'll be in a new debt cycle, or they'll automatically foreclose on you and you'll lose your home. So really stay away from those variable rate mortgages if you can. I mean, just things that are really non-traditional. Sometimes non-traditional can mean predatory. Okay, next. That's the end. That's our whole slide. Okay. That's all we have on predatory loans. I think that's everything. Now, if you have any questions, please call us. Housing discrimination is against the law. So if you or anyone you know has experienced discrimination, contact Metro Fair Housing, and we cross-train at our agency, so everyone is equipped with the same knowledge and the same information.
Thank you, Giandra. This was fantastic information, and I'm so glad you covered the fair lending side of it, because that is so important, and so many people have taken advantage of or experience this kind of discrimination and never connect the dots, and then they don't get approved, or their aspirations for becoming a homeowner or having good credit, all those things, that perpetuates a problem of fear and being told no, and just shuts the door on them. And so many people, once they've been told no, they never go back, or once they've experienced this kind of discrimination, never go back, because they feel like they've been belittled and don't know what questions to ask sometimes. So thank you for clarifying that. And again, here's their contact information on this slide. Again, for those of you who are on the call, you are welcome to download these slides at our website, okc.gov/SNI. And again, Giandra and Mary Dulan is probably on the call too. She's your executive director at Metro Fair Housing. These are great people, and they are an absolute one of our best resources in Oklahoma City. So please do call them if you have any questions about anything that you heard tonight. Thank you again, Giandra.
Thanks, Sharon.
Just a reminder for those of you who are on the call, if you could keep yourselves muted. Most of you have, but a couple times we've heard a little bit of background noise. If you guys could keep yourself muted, that would be fantastic. Next, we have Alejandra Martinez. She is a housing counselor at the Community Action Agency of Oklahoma City, or of Oklahoma. And she's going to tell us about the down payment assistance and closing cost programs here within the City of Oklahoma City Home Program.
Hello, good afternoon. Hopefully everyone's doing well. I am going to go over, like she mentioned, my name is Alejandra. I work with Community Action Agency under the Special Projects Division, and we do have several home-related services. But one of our main programs are our down payment and closing cost assistance and home buyer education workshops. I just noticed, and she did send me the presentations to review before, but I did notice that my email's wrong. It should be CAAofokc.org. Everything else is correct. I just wanted to point that out. I'm going to go over, next slide, please. We are funded through the City of Oklahoma City, but the funds do come from the U.S. Department of Housing and Urban Development, so it is a HUD-funded program. So it does have program requirements that we have to follow or make sure that the client meets in order to receive the assistance. We have one for the Oklahoma City area, and you can and are eligible to receive up to $14,999 in assistance. The program goes towards the down payment and closing costs, so those are the costs associated when you are getting that loan, which you kind of already heard about how to get approved and everything, but you don't have to be a first-time home buyer, so you can already own a home. We just need to know what you're doing with the home you already own, and the home that you're purchasing with our assistance has to be your primary residence. So it cannot be used for like an investment property. It has to be your primary residence. And you also do have to attend a HUD certified home buyer education workshop. So like Linda mentioned earlier, NHS of Oklahoma City is one of the agencies that offer it. We have in-person workshops as well that we offer throughout the year. The household itself has to meet the income guidelines. So it doesn't matter who's on the loan. What matters is who's going to be living in the household. So there's some there are some times where maybe just the husband or just the wife qualifies for the loan to purchase a home. For us, it doesn't matter. It has to be whoever will be living there. So we will count your gross income. And so here are the guidelines on the side on the right. So for a household of 4, let's say 2 husband, wife, 2 kids, the income guideline cannot exceed $59,050 per year. We can deduct your health insurance, retirement contributions, alimony if you pay any, or student interest that you've paid through the year. So that can be deducted from your income to determine if you're going to be under the income guidelines. You must be able to qualify for a mortgage through either bank, credit union, or a mortgage company to purchase a home. So we don't have a credit score requirement, but the lender will have one. And so as long as you can qualify for a mortgage, you can use our assistance as long as there's no co-signers. We do look at your debt to income ratios. So similar to what the lender will look at, we go off of our household gross income calculation. And depending on that amount, whatever that monthly household gross income is, your mortgage payment has to be below a certain ratio. It's called the housing ratio, and it cannot exceed 31%. And your total debt ratio, which is your housing housing expense, which is your mortgage payment only, not counting utilities or groceries or anything else, just your mortgage payment plus your debts that show up on your credit report cannot exceed 43% of your household income. We try to assist with the maximum 10% down payment, but the minimum we can provide is 5%. It is going to depend on the purchase price, because the higher the purchase price is, the less we can provide for down payment, since we also cover your closing costs. There are purchase price limits. So for existing homes, it cannot exceed $140,000, and that means a home that someone's already lived in before, it's been occupied. And then new construction would be $228,000. So it's as long as no one has occupied that home. I mean, it could have been built in 2019 and it'd still be considered new construction. You do have to have some skin in the game when using our program, and we do have minimum investment or minimum contributions that would depend on the purchase price of the home. So, and the type of loan that you're getting as well, the loan product. So if you're doing a conventional loan product, like Linda mentioned earlier, which is one of the products that you can possibly get, it would be 1%, and then for FHA it would be 1.75% of the purchase price. And this is not going to be in addition to costs that you already have. I mean, there are some circumstances that you may pay or bring a little bit more than you would pay for, just as far as your upfront costs. But it is, again, being based off that purchase price. We will count earnest money, home inspection fees, your appraisal fee, if you have a pest control inspection fee. And if you don't have any more costs, but you still have to meet your contribution, then you would just bring the rest to your closing. Next slide, please. Now, the Oklahoma City program, has its own program boundary. So the home must be located within the boundary. So the map on the right, it has the main streets on the outline. And so it's not like a rectangle shape where you can just kind of give off. But as you can tell, we go up to Britain on some parts in the north side, 63rd. We go out to Council in that little section, but mostly Meridian and Portland. And then on the south side, we do go all the way to 89th and east to Bryant. And then there's like a little branch off that goes towards a little bit past Bryant. But the home has to be within those areas. So if it's out of that area, it's not going to qualify for this Oklahoma City program. If you do have more than $15,000, like in your checking or savings account, we do look at how it can go towards the purchase of the home as you're able to. And you also have to have 2 months reserve. So that means whatever your mortgage payment is going to end up being, you'll have to have at least 2 months in your savings by the day of your closing. And the day of your closing is when you sign all the paperwork and you get the keys. So we will have to have proof of that. And if you don't already have savings for your contribution or your reserves, we do sit down with you and do pre-purchase counseling. We'll go over your finances and work out a plan on how you're going to get there, how set a goal of when you'll be able to save enough money to be able to cover those two things. The property also has requirements. It has to pass an inspection, so it has to be habitable. It is a health and safety hazard inspection that must pass before you can receive the assistance. So the seller has to agree to do those repairs. You, in order to receive that assistance, you have to agree to live there. It has to be your primary residence for at least 5 years. That starts 60 days after closing. So once you live there for 5 years, 60 days, you don't have to pay back that assistance. It's 100% forgiven. So, 5 years flies by, and if you can stay in it, that would probably be the best option, just so you don't have to pay any of the assistance back. Like I mentioned, the property, if it's rented or rental, it does have to be vacant for a period of time, unless you yourself are renting that property. And there are some other small requirements. These are the main requirements, but you can contact either our agency or NHS. We both offer this program, and we can go over in more detail or just look at your situation and see, if you would qualify for the program based off the requirements. So there's our contact information. Like I mentioned, on my email, it's just caaofokc.org, and that's my mistake because it looked okay when I reviewed it, but not. It's okay. And like I mentioned, NHS as well has their classes. We have our classes. Right now we're booked until about September, but we are trying to add some more dates in between to accommodate for those missed classes that we have to cancel. But yeah, that is pretty much a really brief overview of the program, but it hopefully gives you a pretty good idea about what we can do to assist you.
Thank you, Alejandra. You really hit all the highlights really well. Like we've mentioned before, this isn't intended to be a full-blown homebuyer education class, and you guys can't do a full housing counseling session right now on this workshop. But I will make sure we will correct your email addresses and your information and repost it online just so everyone has it. I'm sorry about that. And from what I understand, NHS and Community Action both. They may do some work as far as housing counseling online or virtually, and do some other things and work with people. If you're a first-time home buyer and you're going to get the down payment assistance, you have to go through homebuyer education.
Yes, they do.
Yeah, but it's not. Am I correct in saying that but because of COVID and because of the situation we're in right now, they're not going to be held up from closing if they don't finish it, or if there's a problem right now getting a class? Is that correct?
As far as our agency, I don't know about NHS, but our agency, we are directing them to online options. So NHS, like you mentioned, has an online option, which we do refer them to. And that, even if they do their online or in person, it would count towards our down payment assistance program. As of right now, we are having the in-person ones, but they're just limited to how many we can have per workshop. And so but yeah, there should be an option available for them to be able to take it before closing. And the fee that they do pay for the online option will count towards their contribution as well. So they're already going to have to pay at least some money towards that purchase, and that will be included in that as well. So
okay. Thank you very much. This is great information. We are seeing that we know we're 7 minutes over. However, if everyone can hang on, we're almost finished. We want to give everyone time to ask their questions, but also get some more information. The next subject, thanks again, Alejandra, really appreciate you guys.
Oh, thank you for having me.
Absolutely. So the next few slides are we have three fantastic housing partners that we work with the Strong Neighborhoods Initiative. We actually have four. Actually, we have dozens. We have dozens of great partners, but that actually build homes. We have about 4 nonprofit partners. The first one here is Positive Paseo, and these are 3 homes that are under construction. Cheryl, if you're still on the call, would you like to say anything real quickly?
I will say quickly that, yes, we have 4 new homes in Capitol View. 1 has a contract on it already. The other 3 are still available and super cute, better even than the renderings. And my architect loves to put sports cars in all of the renderings, which cracks me up. But great homes, spread the word, and we're getting lots of interest on them. And I think Capitol View is just the most fantastic neighborhood ever. And I love working with all the partners over there. And Murphy and I, and this is Murph, Murphy and I inspect the homes every day. So you know, they're of highest quality.
Well, most of us can't get down to his level or her level, so, you know, it's probably helpful.
Oh, yeah. So between me and Maddie, who is also on the call, who's my wonderful second half here, we are so proud of the homes that we're building, the neighborhoods that we're improving, and love being a partner with SNI.
Wonderful. Thanks, Cheryl. Okay, next is Progress OKC, and they have several homes under construction right now in Culverson's East Highland. These 3 are featured on Euclid Avenue, which is really close to FD Moon and kind of over by JFK Park. And is Mariana still on the line? Let's see. I think she is. Do you need to unmute, Mariana?
Can you hear me?
Yeah,
can you hear me?
There she is.
Wonderful. Thank you, Shannon, for the platform and for the opportunity. My name is Mariana Adams, and I'm the servant leader of Progress OKC. Like a good neighbor, we invest and meet people where they are, their neighborhoods, businesses, and families where growth, opportunity, and wellness are best suited to happen. I really like to say that we share our time, our talents, and cups of sugar through partnerships and programs focused on housing stability, economic mobility, quality of place, and education, and an effort that I'm so proud of and really excited about is what I'm terming rebuilding the block on Culberson East and Culberson East Highland on Euclid Street. Near FD Moon, as Shannon said. We had the opportunity to develop 9 new construction homes, a majority of which are income eligible. We have most of them are under contract at this point, we have homeowners in the homes, but we have 3 that are still available. 1712 is income eligible, and thankful to our partners to the City of Oklahoma City, Community Action Agency, and NHS. They have fantastic programs and tools that have already been mentioned. They can make that home buying process easy and accessible. And then the other 2 do not have those restrictions. So some of the standard features, I won't go over all of them, but energy efficiency construction package, stainless steel appliances, and as well as warranties. And then I just encourage you all to follow our work on social media at Progress OKC CDC, again at Progress OKC CDC. Thankful again for our partnership with the City of Oklahoma City, Stronger Neighborhood Initiative, the Alliance for Economic Development, and Acura. Thank you all.
Thank you, Mariana. And I want to mention also that just at the bottom of this slide, you see that Verbode's phone number and email is on there. And that is if you are interested in learning more about these homes, they're the real estate company. Verbode is Sarah at Verbode. She is the realtor for those 3 homes. So if you're interested in those, definitely give her a call. Thank you, Mariana.
Thank you.
And by the way, I want to mention too, those homes, you may see that they may look yellow or green. That is not, those are under construction. So just to clarify, those are under construction right now. They may be yellow or green, but right now they're not. They're just under construction. Okay. Next we have Pam Bingham. She is with JP&A, and they have 2 homes under construction also on Euclid, just a block away from the Progress OKC homes, also in Culverson's East Highland. Pam, are you on the line?
Yes, we're just a block from Progress OKC. We're super excited to be in the neighborhood. It's a really nice neighborhood, well established, great neighbors over there. And both of our houses are going to have 1-car garages, which we've never done garages before. And so we're very happy about that. Just under 1,500 square feet, and we just started construction. So if you're over in the Euclid neighborhood, just drive by, you'll see some foundations there. Hopefully we'll have framing shortly.
Wonderful, thank you. And something you may all notice from all these images of these houses is nearly all of them, if not all of them, have front porches. That was something that was established years ago as a priority for the neighborhoods when we talked about what they want to see, and this terms of construction and what they want their neighborhood to look like. Nearly every time we want front porches. We want to be able to see our kids on both sides of the house and wherever they are. We want to be able to see our neighbors and spend time outside. So now more than ever, I think we probably can all appreciate that a little bit. Okay, next, I do want to mention too that NHS is another one of our partners. They right now don't have any current homes that are currently on the market, but they do typically have homes. They are building homes. I think they have some planned. They're not all approved just yet, so we couldn't really put them on the website and couldn't really advertise them yet, but they'll have some homes, I think 3 or 4 coming up hopefully the next 6 months to a year. So again, that's another more homes being built on all the vacant lots in Northeast Oklahoma City. So we're very proud of all of our partnerships. Here's some of the information again of the contacts. Again, this information you can print it off at okc.gov/SNI. I want to point out a couple of these partners that didn't do presentations today. So for example, Simmons Bank, they have down payment assistance. If you need down payment assistance, they have some programs that can work alongside some of our programs on top of them. You can layer some of these. So give them a call if you're interested in that. On the next slide, OFA, the Oklahoma Housing Finance Agency. I learned last night and today, so we added this today, that they in fact also have some very generous down payment assistance programs. I looked through them today and thought this is definitely something we need to pass on to potential buyers. And the Oklahoma City Housing Authority. They have a family self-sufficiency program that helps people who are in public housing save some money and then be able to potentially use that for a down payment or whatever they want to use it for. But it's a full-blown financial literacy program that just is absolutely fantastic. I don't know how many people use it, but it sounds like a fantastic resource. You notice the OCU School of Law logo here with Richard Kling, and then Legal Aid Services Michael Figgins. Those are 2 more of our partners that we utilize a great deal to deal with just any kind of legal assistance that home buyers or just neighborhood residents need. Richard Kling specializes in evictions, which right now is something we're truly concerned about. So if you need assistance and you're in a situation where you're concerned about, just one second. Okay, sorry. This is what I was afraid of all night long. If you have any questions about evictions, Richard Kling is absolutely one of the best resources you're going to find. Same thing with Legal Aid, Michael Figgins, he's fantastic, and so is his crew there at Legal Aid. So we really appreciate them a great deal. Another partner that we have dozens of partners, but another housing partner of ours that isn't on one of these slides we build together. They also do a great deal of work with rehabbing homes, and as well as, if you notice in the slide, the City of Oklahoma City Housing Rehab Program, Nicole Knox is there. She is also a fantastic resource to get to know. If you know of neighbors who own their homes right now who need home repairs, whether it's roof leaks or electrical issues, foundation issues, all kinds of things, plumbing problems. You can call the city's housing rehab office. You can maybe talk if you need wheelchair access. You can also talk to Building Together, Community Action, NHS. There are so many resources for you. Don't let these problems snowball. There's plenty of resources out there, plenty of partners out there. And so we're truly appreciative of all of them. Okay, so do we have any other lingering questions out there? I don't hear any. I want to also repeat, you guys saw this slide early on. I want to repeat this. If you need assistance with rent, mortgages, electric, gas, or water, call Community Action 232-0199. There's a link here to their website. You can apply online. This is brand new. They literally started taking applications yesterday. And so please share this with your neighbors and loved ones if you need it. The worst thing you can do right now is have this dream of home ownership. You go through home buyer education, you know what direction you want to go in, but then you have a credit issue because of something you didn't pay right now under these terrible times. So make sure you get this assistance if you need it, and share it with others that you think might also need it. This is a partnership with HUD. This money is coming from HUD and the City of Oklahoma City. We're contracted with Community Action Agency, and they also have some other funds they're using for this as well. There will be more funds coming to Oklahoma City to assist with nonprofits, with individuals, to try to help mitigate some of the impacts and effects of COVID-19. So be looking for those. And if you follow SNI on social media, we'll be sure and post what we can. And most of the stuff we're not funding, it's just we know that people in our neighborhoods need it. So we appreciate everyone for sharing this information. These are our partners. We have dozens, and we appreciate everybody. Just can't say enough good things about all of our SNI partners. As you saw tonight, these are terrific individuals. They're very knowledgeable about the home buying process. They're professionals that are here for you just like we are. But if you need them, you'll have their contact information. Again, you can print this whole presentation off at okc.gov/SNI. And if we don't have any other questions, does anybody have anything they want to bring up? Okay, well, there's a website for our slides. Here's the contact information for Jennifer Sylvester and I at the planning department. Please follow us on social media. We share a lot of information that we hear about. And if you just want to follow the progress of what's going on in some of the neighborhoods that we work in, we'd love to hear from you and let you be part of the process. And with that, thank you so much. Thank you to all of our speakers tonight. And everyone take care of yourselves right now, and know that we're thinking about you.